Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, can we still gamble on DraftKings profits, or is this stock just a bad bet? Let's take a look at DraftKings with the ticker symbol DKNG. If you're watching this video, I'm assuming that you're already interested in investing in DraftKings, but if you'd like to learn more about the company, I will put my other video where I go deeper in depth into its back end at the end of this video. In this video, I'm going to develop a buying plan of what I would do if I didn't currently hold a position in DraftKings, and then I'll go over my own position and where it's come from since my last video update, as well as where I'm going to take it into the future. My last video was at the beginning of December of 2021, with DraftKings right around $30, and in the video I said I wasn't going to add to it until it got below $20. This prompted a commenter to say it's never going to $20, how new to the markets are you? Well, it turns out I'm not new to the markets. Not only did DraftKings collapse below $20, but during the sell-off it collapsed below $10. To me, that comment illustrated the importance of never trusting a bottom. You never know how low a stock can go. One of my key disciplines is that nothing in the investing world is impossible. No matter how improbable something is, it's always possible. So for all of my buying plans in any of my investments, I take into account exactly how bad it could get, even if the asset goes to zero. No matter how unlikely that situation is, it's important to think about it before you invest, not after you're in it. You can see that DraftKings made a bottom in May at $9.77, and one of the key elements that's very positive for this stock is it's never approached that bottom again. It had really positive news catalysts. So even when the S&P 500 made all new lows in September, it turns out DraftKings was nowhere near those bottoms, with its most recent bottom here at $14.62. So what I would do to develop a buying plan is I would draw a Fibonacci retracement from the bottom in May to its high in August to create levels of support where we might be able to make additional buys to the position. You can see that this Fibonacci retracement does seem to be pretty accurate, with a lot of price action right here around the 50% retracement around $15.61. So if I wanted to be more aggressive when it came to opening my position, I'd actually start with a higher buy, probably around the most recent low, and you can see these 2 days here found a lot of support around $16.08. So that would be my first buy. However, because the market is so volatile and DraftKings is volatile too, I wouldn't start with my typical 50% allocation. Instead, I'd start with a 25% allocation and reserve that 75% remaining to buy in stages on the way down in 10% increments. I would make my next buy here at this low at $14.62 so that I could add to the position in a relatively quick way. DraftKings has had a lot of good news lately, especially with its potential partnership with ESPN, so it's possible that this stock won't demonstrate as much weakness as it has in the past. After that, we come to the 78.6% retracement line, and you can see that there was a lot of price action around this line. However, on this day here, it did find support above it, so I'd probably use the close at $12.65 as my next buy. After that, we have a bit of a gap between the two retracement lines, and you can see that it found a lot of support above it, so I'd probably use the low of this day here at $11.12 as my next buy. Following that is the bottom at $9.77. At this point, we'd have a 65% allocation in DraftKings, which means we still have 35% cash left over. However, that's the way I'd want it. With the market being as volatile as it is, and us not knowing what the macroeconomic environment looks like next year, it is possible that this bottom at $9.77 won't hold. We can find additional levels to buy at by pulling out on the chart and seeing that the Fibonacci retracement has left us a new one at 127.2% down here at $6.59. However, since I'd want to be a little bit more aggressive, what I would do is to divide those two Fibonacci retracement levels to create a new buying level. This would split the difference and give us a new buy at $8.18, and after that I would make a buy down here at $6.59. At this point, we would have an 85% allocation in DraftKings, our initial buy and the following buys afterwards, and I'd still save that 15% cash to buy at lower levels. If DraftKings never got down to our low targets, that's fine. What I have is what I'd have, and I'd take the extra money I had allocated for DraftKings and use it in a different position in the future. From here, let's take a look at my own position in DraftKings and where it's come from my last video update. My last video was early December of 2021, and I just made a buy at $31.05, leaving me with a per share cost of $40.54. And like we already know, DraftKings sold off spectacularly from here. Like I said in my initial video, my next buy target was above $20, and that's where I bought on January 20th of 2022 at $20.60. This lowered my per share cost 9.84% down to $36.55 a share. However, like I also said, my target of $20 was too high, and DraftKings ended up not finding support until under $18. Throughout the Russian invasion in Ukraine, DraftKings continued to sell off and demonstrated extraordinary weakness. I made my next buy on March 11th at $16.75, and this lowered my per share cost another 9.03% down to $33.25, but DraftKings wasn't done yet. During its extreme sell-off going from April into May, I made two additional buys, with my first buy at $13.30 on April 28th and my second buy on May 11th at $10.40. The combination of these two buys lowered my per share cost to $27.90, which represents more than a 16% reduction from where it was in March. And from here, DraftKings has made its bottom and bounced significantly from that point. So where do I stand and what do I plan to do for my next buy? So with DraftKings currently bouncing around the $16 mark, my current per share cost is $27.90. And this demonstrates the power of buying in stages, because that represents a 47.33% reduction from my initial buy around $53 a share. From here, I am going to wait and see if DraftKings tests its low for May. So my next buy target isn't until $9.90, because I already have a decent allocation in this position. My next sell target is above $30, around $31.75, and the reason for this is it's higher than my per share cost and below the next level of resistance that DraftKings might find on its way up. If you like this video, please hit like and subscribe, and I'll see you in the next video.